connect with Prabha Narasimhan, the Managing Director and CEO, joining in from Colgate-Palmolive to discuss their quarterly performance in greater detail. Thank you so much for joining us on ET Now. Now, you have managed a high single-digit growth all in all for FY24. What is the outlook when it comes to FY25? What's the growth you're penciling in?
Our average per capita consumption indexed even to a country like the Philippines, which is quite similar, is at 0.6. And only 20% of urban consumers brush their teeth twice a day, and 45% of rural consumers brush their teeth daily. So there's a tremendous opportunity for us to continue to inculcate good oral care habits. And in this, there is also an opportunity for us to grow the category. So we're quite optimistic in terms of how the category could evolve over this coming quarters, years, actually, to be honest, even perhaps the decade, in terms of driving this consumption up to the level that it should be for good oral health. The second vector, of course, is on premiumization, which is the other way to grow value in the category. And here as well, the oral care category is under-indexed relative to the other personal care categories. So only 12% of the oral care category sits above the 140 price index, and only 28% of premium consumers or SCCA consumers actually buy a premium oral care toothpaste. So just in moving these two numbers, which for other personal care would be a 30% category contribution and anywhere around 50% of premium consumers buying premium products, I think there's tremendous headroom for growth.
So FY24 was more of a pricing-led growth. What is the exception? What is the exception pricing volume growth?
Actually, pricing is really an outcome of what is the bundle of benefits that we are offering. And so it's not like we have a pricing strategy that says in this year we will get X% of our growth from pricing, and therefore we will then titrate all our actions to driving that X%. What we end up doing is to say that we have a portfolio of products that play across the full benefit spectrum, and each of those benefits can command a certain price. And we then price our product. The combination of the benefit and the brand can command a certain price, and therefore we price our products at that level that can be commanded by this combination of benefit and price, and the multiplication of all of that leads to an outcome on pricing strategy. And so if you're asking me what is the shape of growth that we look forward to, ideally we look forward to a shape of growth that has a balance between pricing, mix due to premiumization, and volume. And a contribution of all of these three in balance is perhaps the ideal kind of growth that we would look forward to. And given the context of the market that we just discussed, I think it's not undoable.
How are the sales in rural and urban regions moving?
Towards the beginning of the second half of last year, actually, we had called out that we were seeing some green shoots in rural consumption and rural volume growth, and that has actually played out. And if you hear the commentary from most FMCG companies, actually this quarter, you are hearing that rural is coming back, and that is pretty much where we are at as well, that we are seeing rural grow at about 200 basis points faster than urban. Which is great, because we do for a little while rural growths have been trailing urban growths, and now we are seeing it revert back to rural being ahead. This is an important pillar for us, because this is also an area where the volume growth driven by consumption becomes really important. So the conditions being favorable for us to then nudge it further with the consumption behavior building activities, this is a good moment for us to be considering better performance from rural.
Right, and you are a market leader, so what is the company's strategy now going forward? How do you plan to drive your market share?
So I think firstly, there isn't a lot of unorganized players in the oral care category. Well, certainly not in toothpaste, and so it is a combination of largely of organized players. We're not seeing a lot of the unorganized players in the category. And our job on competitive growth really, and I'm going to sound a little bit like a stuck record unfortunately, goes back to the pillars of our strategy which we've discussed, which is firstly grow category volume by driving consumption, Secondly, build our core brands to gain share, and our core brands are very, very strong equities in terms of Colgate Strong Teeth, Colgate Max Fresh, and Colgate Active Salt. And then, of course, add on the layer of premiumization, which allows us to drive value up trading, which then allows us to be to add market share as well. So in combination of these three is how we hope to deliver this competitive growth for ourselves and gain market share.
And if we were to talk about the personal care segment in specific, how exactly is that performing?
So I think the personal care segment is white space opportunity for us. We are largely an oral care company. The great thing is that we have in our stable a brand called Palmolive that over 50% of the target audience has heard of, a brand that has good recognition. And last year we tightened our strategy into being that Palmolive has the right to win in body wash and hand wash and will play in those segments. We upgraded our formulations towards the back end of last year. We have launched 3 new variants in body wash just at the beginning of this year, and now we've launched a new communication on Palmolive just a few weeks ago, which really just talks about the sensorial element of bathing with Palmolive. And because it is a white space and we are very much the challenger brand here, our job actually is to gain share in this category. The category itself grows at a 30 to 40% CAGR. Opportunity for us to grow even faster than that.
Plans to launch more from the global portfolio like the pet food business? Would you be just looking at expanding beyond the ambit of oral care?
So, two-part answer to your question. I think are there opportunities for us to bring in things from our global portfolio into India? 100% yes. Are we considering those opportunities? Yes, we are, and a couple of them are also actually quite a way down the innovation funnel, if I may say. So there is opportunity certainly, and you will see that opportunity fructify sooner rather than later. On pet specifically, at this moment we are not thinking about bringing pet into India, and it's not on our radar at this particular moment.
Right, interesting to get in a perspective from the company as to how you're performing and what the roadmap ahead is. That's the word coming in from the management of Colgate-Palmolive. But let's move on to an ET Now exclusive. And we learned from sources that the Inox GFL group is going to be setting up a renewable energy platform along with PE players. What are all the details? We've got Priyanka Uppal joining in to share them with us. Priyanka, what are your sources telling you?
Absolutely. Inox GFL group is, what we're learning is set to launch a renewable platform along with the clutch of PE investors, and this platform will give the turnkey solutions not just to group but also to the third-party corporates. Some of the marquee foreign investors are interested in picking up stake. Names are likely AP Moller Capital, I-Squared Capital, and Actors are the likely names, and few of the Singapore-based funds are also interested in picking up stakes. Foreign investors will hold 51% stake in this consortium, and 49% will be with Jain family, the promoter group. The platform, this new renewable energy platform, it will produce around about 1.5 gigawatt of wind and solar power for several states. Jains will transfer, the promoter family will transfer certain solar and wind energy assets from Gujarat Fluoro as well as Inox Green. This gamut of things for this platform, wind energy equipments will be supplied by Inox Wind, and this will fetch them additional revenues of around 10,000 to 12,000 crores over a period of 3 to 4 years. Since we understand that Inox Green, which takes operation and maintenance work, they will also get a pie from it. Around about 150 to 200 crore of yearly contracts will come to Inox Green, and ENY is heard to be the advisor to the consortium, to Inox Group, Inox GFL, as well as the PE investors who are interested in this entire consortium. And this platform will be launched, can be launched in another 3 to 6 months. And we did send query to Inox Group, but that it went unanswered. But then this deal is very interesting since we see that a lot of interest is coming in renewable space, especially when India is also trying to cut down its carbon emission.
Thanks very much, Priyanka. That's the exclusive news that we're picking up on Inox GFL.
If you like this video, then like, share and subscribe to ET Now.